afternoon, and thank you all for joining us today. I am NIN Desai, and I will be your host. Before we dive into the agenda for today, let me start with my background. I started my professional career at Merrill Lynch with a private client group and merely managed a portfolio of high net worth individuals. While it was great to trade stocks and bonds, I was curious about how these companies went public. Thus, after business school, I joined Pacific Crest Securities. PCS is a tech-focused investment bank with a global presence focused on software, communications, semiconductors, and internet and digital media. Here are a few transactions I worked on at PCS. In 2005, IPOs were at the peak, and it was amazing to take all these companies public. But that led to another question. How do VCs know what companies to invest in and which ones to take public? Thus, I joined Alpha Capital Partners. Alpha is a generalist fund with about $135 million of assets under management. My most recent transaction at Alpha was SIRCON, a software-as-a-service provider company. The 2008 financial meltdown led to a liquidity crisis for entrepreneurs, companies, LPs, and VCs. Fewer IPO means no exits for VCs, no return for LPs, and as a result, venture funds were on a decline. No new fund means less startup funding, low employment, and slow economic growth. Thus, on April 2, 2012, the Jumpstart Our Business Startup Act, or the Startup Act, was introduced, which enables crowdfunding for all Americans, and that's how NIN Ventures came into existence. Crowdfunding is a practice of funding a project or venture by raising contributions to a large number of people, typically via the internet. NIN Ventures is a first-of-its-kind technology venture capital fund to be marketed, raised, managed, and reported online. The general solicitation and general advertising under the Jobs Act and Rule 506C of the U.S. Securities Act made it possible for us to raise this fund. This rule came into effect September 23, 2013, and we were the first ones to go live with a website and videos about our fund. NIN Ventures also became the first venture fund to be seen on a billboard, which was followed by in-taxi ads and other social media facilitated marketing. NIN VC has been the recipient of numerous awards, and I was also awarded 2015 CE of the Year Illinois for innovation and contribution to the venture capital and private equity industry. Since 2014, the crowdfunding industry has grown from $16 billion to an estimated $34 billion in 2015 and is doubling or more every year. According to the World Bank estimates, crowdfunding will have a global market of $96 billion by 2025, which is 1.8 times today's global venture capital industry. Crowdfunding is spread across several different types of funding models, including rewards, donations, equity, debt, lending. The two most popular types of crowdfunding methods are reward and equity. The reward-based crowdfunding, entrepreneurs pre-sell a product or service to launch a business, and sometimes even in return for gifts or thank you notes. For equity crowdfunding, backer receives a share of the company, usually in exchange of the money pledged. For NIN Ventures, it would be limited partner interest in the NIN Ventures Technology QP fund. So what is the difference between direct investing in a company using crowdfunding portal and NIN VC? Number one is diversification. As a fund, NIN Ventures Technology QP fund makes multiple investment in companies in different sectors. For example, 3D printing, cloud computing, education software, etc. during Series A or B financing. This strategy helps diversify the fund's portfolio, which is not the case when one invests a company directly. Think of it as investing in a mutual fund versus stock. Number second, low risk. Given the diverse portfolio of the fund, NIN Ventures Technology QP fund is a comparatively lower risk vehicle, whereas direct investing in a company exposes investment to a higher degree of risk. An appropriate analogy would be to put all your eggs in one basket. The logical follow-up argument would be, what if one makes multiple direct investments in a company of their choice using a crowdfunding portal over investing with NIN VC? Given 90% of startups fail, even if one invests in several companies via a crowdfunding portal, it becomes solely a numbers game, quantity over quality. On the other hand, fund management invests in entrepreneurs because entrepreneurs build companies and not the other way around. We, or any other venture fund, not only provide adequate financing, including follow-up financing, but also lend our domain expertise and network of partners to help companies with recruitment, PR, marketing, and a viable exit strategy. Professional management. Direct investing in a company requires expertise, due diligence, constant follow-up, and monitoring. On the other hand, NIN VC acts like a financial advisor and works for the investor and in the fund's best interest. The fund also provides quarterly audited financial statement to the investor on the progress of the fund. Board representation. A $1,000 direct investment in a company using a crowdfunding portal does not give an individual enough rights, while as a fund we take board seat on all our investments. Thus, we are in the loop with the company management when it comes to keeping tabs on the progress of the company and are in the position to help and make suggestions on several occasions. And also in the position to gauge and be a part of valuation process when it comes to addressing dilution and follow-up financing rounds. Number 5, liquidity at exit. When one invests in NIN Ventures Technology QP fund, they are locked in with the fund and the management for a good 10 plus 2 years. Redemptions are extremely rare, and liquidity happens as and when the fund makes an exit in the company via an IPO or M&A transaction. On the other hand, direct investment in a company can be offered in the secondary market for a transfer of ownership, but valuation, timing, and the choice of investment will dictate that transaction. There is a major flaw in the way crowdfunding functions, and that is what NIN VC is solving. I come from an entrepreneurial family, so I can speak on behalf. Entrepreneurs are brave and courageous bunch that are determined to change the way an existing industry functions. On that journey, they need a lot more than just financing. They need guidance and domain expertise. They need help with PR and marketing, recruiting, viable exit strategy, and more often follow-up financing, which crowdfunding portals are not able to support. Crowdfunding exposes investors to a whole new asset class, which the normal population does not really have the knowledge and expertise to invest in. With diversification, with board seats, and lending necessary support that an entrepreneur needs, NIN VC has solved all those problems. The market is flooded with various investment vehicles, including stocks, bonds, mutual funds, IRAs, real estate, and alternatives like venture capital, among others. However, most people are still short-sighted and have a three-dimensional portfolio, which includes stocks, bonds, and money market, versus taking the long-term approach and investing in venture capital. Investing in alternatives allow true diversification and mitigate risk involved in just having a traditional stock bond portfolio. For example, Yale. Yale is currently the best performing endowment fund in the United States. Since 2005 to 2015, Yale has increased its asset allocation in private equity venture capital from 20.2% to 33%, out of which 16.3% is venture capital compared to 13.7% in 2014 and just 10% the previous year. In general, most people have three-dimensional portfolio, like I mentioned, stocks, bonds, and money market. But if you look at Harvard and Yale, they take the long-term approach and invest in alternatives like venture capital. And the reason they do it because historically, if you look at U.S. Venture Capital Index and S&P 500, U.S. Venture Capital Index tends to outperform S&P 500. And not only that, they have an inverse relationship. This type of investment strategy allows true diversification and also helps mitigate the risk involved in having just the stock and bond portfolio. Most people are indirectly invested in venture funds via a pension fund or any other investment vehicle. Crowdfunding allows them to invest in a fund of their choice by eliminating the middleman, that is the pension fund and their management fee, and allows them to generate higher returns. Now a little bit about the fund. NIN VC is a $25 million early to growth stage crowdfunded technology venture capital fund. We invest in Series A and B rounds and write checks anywhere from $1 to $5 million. So now the question is, why early stage technology venture capital? If you notice, from 2002 to 2012, technology investments have dominated the venture capital industry, or actually 2015. The highest amount of venture capital funding occurred in early to expansion stage companies. If you notice, from 2000 to 2015, sector-focused funds have outperformed generalist funds, and technology sector has outperformed the rest of the U.S. venture capital index, with early and expansion stage companies yielding the highest returns. So what does NIN VC invest in? At NIN VC, it all starts with the disruptive technology. A disruptive technology is an innovation that changes an existing industry and creates a new value network, displacing earlier technology or ways of doing business, just like how we're changing the venture capital industry. We like to invest in entrepreneur. We invest in an entrepreneur because entrepreneurs build companies and not the other way around. Being an entrepreneur is the hardest job in the world, and entrepreneurs face varied challenges when it comes to taking their disruptive technologies to market. The few attributes that we look for in an entrepreneur is the ability to dream big, experience and expertise in the industry, ability to communicate with the team and outside, flexibility to adapt to a fast-changing environment, and certain personality traits like being focused, dedicated, disciplined, and working hard to accomplish their goals. As long as the company has certain ingredients like a good management team, a disruptive technology, a viable product, a revenue-generating strategy, that form a basic foundation that leads to long-term success. We at NIN VC like to invest in companies that are going to stand that test of time. Every sector at some point is up for disruptions. For 2017, our focus is primarily on 3D printing, fourth industrial revolution, cloud computing, education technology, and other path-breaking sectors within the United States. Our goal is to invest in the next big trends within these sectors. For example, 3D printing. 3D printing has been used for rapid prototyping and is being applied in a number of industries today, including manufacturing, automotive, consumer, aerospace, defense, and especially healthcare. As the accuracy of material markets have improved, medical space shows great potential for this technology. There are about 123,000 people currently on the organ recipient list in the United States. That list grows at an average of 12% annually. On the other hand, organ donor increases at about 1 to 2%, and about 21 people die every day because they cannot find the right organ. What if 3D printing tissues can help save some of those lives? One of the other sectors where we see disruption is the ad tech industry. Traditional television has been on a decline for the past few years because the consumer behavior patterns are changing. People are spending more time on their personal devices like phone, tablets, PCs. An average American spends about 3 hours every day on their personal device, and this is the first time spent on personal devices have surpassed time spent watching television. So what does this mean for the ad tech industry? The current digital advertising market is about $75 billion, and traditional TV advertising is about $112 billion. And as the consumer migrates to watching more digital TV or on-demand content, this $112 billion will migrate to digital advertising, which is a huge opportunity and disruption for the ad tech industry. So how can you be a part of NIN VC? Recently, the SEC approved Title III Jobs Act, equity crowdfunding for non-accredited investors, which allows any U.S. citizen, regardless of income, to make direct investment via a crowdfunding portal. However, investment in funds like ours is still limited to accredited investors. One must be an accredited investor and verify themselves as an accredited investor before they can invest in the NIN Ventures Technology QP fund. An accredited investor is an individual with an income of more than $200,000 per year, or a joint income of $300,000 in each of the last 2 years, or has a net worth exceeding $1 million either individually or jointly with his or her spouse, excluding the primary residence. For an entity, any trust within over 5 million qualifies. There are multiple ways to verify if you are an accredited investor. For an individual, it's income, asset, and third-party verification. For an entity, it's asset and third-party verification. So what are the multiple ways of investing with NIN VC? There is a wide range of options when it comes to investing in the NIN Ventures Technology QP, using checkings and savings account, defined benefit plans, self-directed IRAs, or even digital currencies. Let's start with defined benefit plan. A defined benefit plan is a retirement plan that can invest in a wide range of securities and investment products, including venture funds. Some of the advantages of investing from a defined benefit plan are all contributions made to the plan and subsequently invested are top-line tax deductible to the business, whether the business structure is a sole proprietorship, LLC, LLP, PC, C Corp, or even an S Corp. The investment growth is tax deferred under the umbrella of the self-defined benefit. The contribution might be significantly greater than that of the 401k profit sharing plan to help increase the retirement savings account for the business owner. To invest in the NIN Ventures Technology QP fund using your defined benefit plan, you must first sign up on NIN VC, establish a defined benefit plan with Robin and Associates. Once the plan is established, the contribution will be calculated, and you can complete the subscription and payment process on NIN VC. We also let investors invest in our fund using their retirement plans, for example, self-directed IRA. Self-directed is a descriptive term that is used to describe how some IRA providers administer the assets they hold. With a self-directed IRA, the client controls what their IRA invests in. Self-directed IRA allows investors to hold alternative assets within their tax-deferred retirement plan, such as private placements in venture capital. Like any IRA investment, self-directed IRA has built-in tax-deferred growth, and thus an individual will not pay capital gain tax on the growth of the investment. The return will flow back to the self-directed IRA and will not be taxable to the account holder. A self-directed IRA allows true diversification that is otherwise not achievable in a standard IRA portfolio. To invest in NIN Ventures Technology QP fund using your self-directed IRA, you must first sign up on NIN VC, establish an IRA account with Entrust Group. Once the plan is established, you can complete the subscription process on NIN VC. Digital currency is emerging as a new form of alternative payments and global currency. We at NIN Ventures understand the significance of this change, and thus have teamed up with Snapcard to let digital currency owners tap into venture capital. We allow digital currency owners to attain liquidity via Snapcard in return for an investment in the NIN Ventures Technology QP fund. Now let's go through the investment process step by step. Visit NIN VC to sign up. Sign up is as simple as first name, last name, email, password, and acknowledge you're an accredited investor. Once you sign up, you get access to our marketing materials, that is investor presentation or other suggested reading. You get invited to attend our calls and events like this one. You can also schedule a one-on-one meeting with us or at our office or online via Skype. Once you decide to make an investment, accept the risk and disclosure statement that will explain what venture capital investing is. The next step is to verify accreditation. Once that is in order, it's a matter of filling out the subscription document and a W-9 form on NIN VC. The last step is payment and is as simple as selecting the method and the amount you wish to invest. Please note that venture capital is a high-risk, high-reward investment vehicle, and we strongly recommend reviewing other suggested readings on our website before making any investment decision.